8 days ago, on July 8th, the IRS quietly changed one of the most frustrating rules in the entire tax system, and almost nobody noticed. If you have ever filed a little late or paid a little late, and then opened your mailbox to find a penalty you did not expect, this affects you directly this year and every year going forward. By the time this video ends, you will understand exactly what changed, whether you personally qualify, how much money it can actually save you, and the one hidden catch that could quietly cost you far more years from now if you do not know it is sitting there. Here is what happened. On July 8th, in a release numbered IR 2026-83, the IRS announced something called the Automatic Exemption from Penalty. Say that word slowly. Automatic. For decades, if the IRS hit you with a penalty for filing or paying late, you had a right to ask for that penalty to be removed as long as you had a clean history. But you had to ask. You had to know the relief existed in the first place. You had to know the right words to use. You had to get through on the phone to a human being. And millions of people never did, so they simply paid. Now the IRS says it will do it for you. No phone call, no form to hunt down, no sitting on hold rehearsing what you will say. If you have kept your record clean, the penalty simply will not be charged, and a notice will arrive in your mailbox telling you it was waived. That sounds small. It is not small at all. Listen to the numbers, because the numbers tell the real story better than any speech from Washington could. According to the National Taxpayer Advocate, in the last full year under the old system, about 220,000 taxpayers actually received this kind of relief. Under the new automatic system, the Taxpayer Advocate Service estimates that over 1.5 million taxpayers would qualify. That is roughly 7 times as many people. 7 times. Picture a stadium filled with people who paid a penalty they never truly owed, then multiply that crowd by 7. And you begin to see the size of what just shifted. So here is the question that should be pulling you forward. If relief was sitting there all along, why did so few people ever get it, while so many were entitled to it and paid anyway? And why is the very person whose job is to defend taxpayers, the one who called this change a major win, also quietly warning that it comes wrapped around a trap? Stay with me, because that catch is real, it is easy to miss. And it is the part Washington is not printing in the headline. Let us slow down and be precise about what actually changed, because the details are where your money lives, and a vague understanding here can cost you real dollars. For years, the IRS ran a program called First Time Abate. The name is clumsy, but the idea behind it was simple and fair. If you normally do everything right and one year you slip, the IRS would forgive the penalty one time. Think of it like a clean driving record getting you out of a single speeding ticket. It was what the IRS calls administrative relief, which means it was not a special favor and it was not charity. It was a standing policy, written down and available. You were entitled to it if you met the conditions. The problem was hidden inside one word: request. First-time abate did not happen on its own. You, the taxpayer, had to notice the penalty on your notice, understand that relief even existed, and then specifically ask for it, usually by calling the IRS and making your case. If you did not ask, you did not receive. The relief sat there on the books, available in theory and unclaimed in practice by most of the people who could have used it. The automatic exemption from penalty flips that entire arrangement on its head. According to the IRS announcement on July 8th, the agency will now apply this relief automatically during processing. The system itself checks whether you qualify. If you do, the penalty is either never assessed in the first place or it is removed, and the IRS sends you a notice explaining that it was waived because of your timely compliance history. You do nothing. You ask for nothing. The burden that used to sit on your shoulders now sits on the machine. The IRS framed this as part of a larger effort to make the system simpler and more consistent. In the words of IRS Commissioner Frank Bisignano, the change reflects the agency's commitment to making the payment of taxes owed simpler and more consistent. Consistent is the word to underline there, and here is why it matters so much to you. Under the old system, whether you got relief depended heavily on whether you happened to know to ask and whether you could actually reach someone. Two people in the exact same situation could get two completely different outcomes. One paid the penalty, one did not, and the only real difference between them was knowledge and luck. Automatic relief is supposed to end that lottery. The rule now applies to you the same way it applies to everyone else, whether or not you have an accountant, whether or not you understand a word of tax law, whether or not you have the patience to sit on hold for an hour with a knot in your stomach. That is the promise, and for once it is a promise with real machinery behind it rather than just good intentions. But a promise is never the same thing as the fine print. And the fine print, as you are about to see, is exactly where the story gets more complicated. 220,000 people helped under the old system, 1.5 million eligible under the new one. Sit with that gap for a moment, because that gap is not an accident, and it is not a rounding error. That gap is a story about who the old system actually worked for, and who it quietly failed year after year. Ask yourself a simple question. If relief was available to well over 1 million people every single year, why did fewer than 250,000 actually receive it? The National Taxpayer Advocate answered that question directly, and the answer should bother you. People missed out, she explained, because they did not know the relief was available, because they did not understand how to request it, because they could not get through to the IRS on the phone, or because they did not have a tax professional advising them. Read that list again slowly, because every item on it points in the same direction. The people most likely to miss out were the people with the least. If you can afford an accountant, your accountant knows to ask for First Time Abate without even thinking about it. It is routine. If you cannot afford one, you are on your own, staring at a notice full of language that seems designed by lawyers to be misunderstood, trying to decode whether you have any options at all before the deadline on the page arrives. The Taxpayer Advocate put it plainly. This particularly hurt lower-income taxpayers and those without professional representation. So the old system had a quietly cruel logic buried inside it. The relief existed on paper for everyone equally. In practice, it flowed mostly toward the people who already had help and already had money. The penalty, meanwhile, landed hardest on the people who could least afford it and were least equipped to fight back. A penalty that might seem minor to someone comfortable can be the exact difference between paying rent and coming up short, between filling a prescription and skipping it another month. The Taxpayer Advocate made precisely that point, noting that a penalty that seems modest to some is financially significant for a taxpayer struggling to pay for rent, utilities, groceries, transportation, or medical care. Now picture the person this actually describes, because there is a good chance you know them or you are them. Maybe recently retired, maybe living carefully on a fixed income where every $100 has a job to do, maybe filing taxes alone at the kitchen table, reading glasses on, the way a lot of people watching this do every single spring. That person did everything right for years, slipped one time and got charged, while a wealthier neighbor in the identical situation made one quick phone call through their accountant and walked away clean without a second thought. Same mistake, different bank account, different outcome. That is the inequality the automatic system is built to erase, and erasing it is genuinely worth celebrating. But before you celebrate, the question forming in your mind is the one that actually decides whether any of this touches your life. Do you qualify? Because the answer comes down to a single rule, and that rule is stricter and less forgiving of your past than most people assume when they first hear the comforting word automatic. Before we go further, it is worth stopping to ask a question that most coverage skips right over. Why now? First Time Abate has existed for a long time. The gap between the people entitled to relief and the people actually getting it has been sitting in plain sight for years. So what finally moved Washington to fix it in the summer of 2026? The answer tells you something useful about where the IRS is heading and what else might be coming. Part of the answer is pressure, applied patiently and repeatedly. The National Taxpayer Advocate is not a private critic shouting from the outside. It is an independent office inside the IRS whose entire job is to represent your interests as a taxpayer. For years, that office has documented, in report after report, exactly the failure we have been describing. Relief that existed on paper but never reached the people who needed it. When the advocate finally called this change a long-awaited reform and a major taxpayer win, the words long-awaited were doing quiet, deliberate work. This did not appear out of nowhere. It is the result of years of steady internal pressure to close a gap that everyone with eyes could see. Part of the answer is technology, and this is the piece that matters most for what comes next. The old system relied on you, a human being, noticing a problem and picking up a phone to reach another human being. That model does not scale, and it never really worked for the people at the bottom. What changed is that the IRS can now check your compliance history automatically during processing without a person in the loop. The agency is slowly, unevenly, being dragged into an era where its computers can do for you what you used to have to do for yourself. The automatic exemption from penalty is one visible product of that shift. When Commissioner Bisignano talks about making the payment of taxes simpler and more consistent, that word consistent is really a word about automation. Machines apply the same rule the same way every time. People, tired and overworked and reachable only after a long hold, do not. And part of the answer is a genuine change in posture, in the basic attitude the system takes toward you. For a very long time, the burden of proof sat squarely on the taxpayer. You had to know your rights. You had to assert them. You had to fight for relief that policy already said you deserved. Making the relief automatic quietly reverses that burden. Now the system assumes your good faith first and acts on it without waiting for you to ask. That is a small philosophical shift with very large practical consequences, and it is worth noticing precisely because it is rare. Government systems do not often move in the direction of assuming the ordinary person is honest and reliable. This one just did. Here is why understanding the why actually helps you, rather than being a history lesson. It tells you where to point your attention going forward. If the IRS is moving toward automatic, computer-driven relief as a general direction, then more of your rights as a taxpayer may quietly start being applied for you rather than by you. That is mostly good news. But it also means the moments where the automation fails, or where it makes a choice you would not have made, become the moments that matter most. The whole game shifts. It is no longer about knowing how to ask. It is about knowing enough to notice when the machine got your case wrong and having the confidence to say so. So this is not a one-time act of generosity from Washington. It is a signal about the direction of travel, and it raises the stakes on the one thing this video keeps returning to. The system is getting better at helping you automatically, which means the burden on you is shifting from asking to watching, from filling out forms to reading them, from fighting to get relief to making sure the relief you were given was the right kind. Keep that shift in mind, because it is exactly the frame you need for the most important detail of all, the one that decides whether any of this reaches your life. And that detail is the rule the entire system runs on. Everything hinges on one requirement, so let us make it crystal clear, because this single rule is the line between relief and no relief, between keeping your money and handing it over. To qualify for the automatic exemption from penalty, according to both the IRS and the National Taxpayer Advocate, you must have filed your required returns on time and paid any tax due for the prior 3 years. 3 years. That is the clean record the system is checking for before it decides anything about you. If you have filed and paid on time for the 3 years leading up to your slip, and then in the current year you file late or pay late, the automatic exemption is designed to catch you and waive the penalty. For businesses that file quarterly, the requirement is a timely compliance history for the prior 12 consecutive quarters, which is the same 3-year span, just measured quarter by quarter instead of year by year. Notice what that rule rewards. It rewards consistency and nothing else. It is not asking whether you are wealthy. It is not asking whether you have a fancy accountant or a lawyer on retainer. It is asking one thing, and it is a fair thing. Have you generally done the right thing over time? If the answer is yes and life threw you one bad year, the system now chooses to assume good faith and let the penalty go. After decades of a system that assumed you had to prove yourself, that is a meaningful shift in posture. But notice just as carefully what that rule demands, because this is precisely where people get tripped up and never see it coming. The 3 years before your mistake have to be clean, not mostly clean, clean. If you filed late 2 years ago, or you still owe tax from a prior year that never got fully resolved, you may fall outside the window and the automatic exemption may never reach you. This is not a program for someone who is chronically behind on their taxes. It is a program built for the otherwise reliable taxpayer who had a single genuinely off year. Here is a concrete way to picture it so it stops being abstract. Imagine you have filed and paid on time every year since well before the pandemic. This past spring, a family emergency swallowed your attention whole, a parent in the hospital, weeks of driving back and forth, and your return went in 3 weeks late with a balance still due. Under the old system, you would owe a penalty unless you knew to call and ask and could get through. Under the new system, the IRS looks back, sees 3 clean years behind you, and is supposed to waive the penalty entirely on its own, then mail you a notice explaining exactly that. You never lift a finger, and you never even have to know the relief had a name. Now change one small detail and watch the whole outcome flip. Imagine that 2 years ago you also happened to file late, maybe by just a few days, over something you have long since forgotten. That single old blemish could knock you straight out of the 3-year clean window, and the automatic exemption might quietly pass you by. Same emergency this year, same late return, completely different result, all because of a minor mistake from an earlier year you were not even thinking about. That is why understanding this rule matters so much. It is not enough to have been good this year. The system is grading the years behind you too, silently, before it ever decides your fate. And once you know whether you clear that bar, the next question lands hard. What exactly gets erased, and how much money does that really mean for you? Let us talk about the actual dollars now, because a penalty is not an abstraction on a page. It is a real number added on top of what you already owe, and it grows the longer it sits. The automatic exemption from penalty covers the penalties that hit ordinary people most often, which is exactly what makes it matter to this audience. According to the IRS, for individual taxpayers it applies to the failure to file penalty and the failure to pay penalty. For businesses, it also covers the failure to deposit penalty. Those first two, failure to file and failure to pay, are the ones that reach into the lives of regular households every spring. So let us put the spotlight there and understand precisely how they bite. Understand how these penalties are built, because the design is genuinely harsh, and most people have no idea until it is too late. The failure to file penalty is the big one, the one that does the real damage. The IRS charges it at 5% of the unpaid tax for each month your return is late, and it keeps stacking, month after month after month, up to a maximum of 25% of what you owe. Read that again and let it land. If you owe money and you file late, you can be charged an extra full quarter of the entire balance in penalties alone, before we have even said a word about interest. The failure to pay penalty is smaller per month, but it works the same cruel way. The IRS charges it at 0.5% of the unpaid tax for each month it goes unpaid, also climbing toward that same 25% ceiling over time. And here is the part that ambushes people. These two penalties can run at the same time on the same balance, and on top of both of them the IRS adds interest, which compounds. A modest balance you fully intended to pay can quietly swell into something much larger, not because you did anything dramatic or dishonest, but simply because time kept passing and the meter never stopped running. So let us put a real number on it, because numbers make it stop feeling theoretical. Say you owed $3,000 and filed a few months late. The failure to file penalty alone, at 5% a month, could add a few $100s very quickly, and pushed near the cap it could reach $750 on that single balance. Now add the failure to pay penalty stacking alongside it, and then add the compounding interest on top, and you can see clearly how one honest mistake becomes a serious, unexpected bill. For someone living on a fixed income, $750 is not a rounding error you shrug off. That is a month of utilities. That is weeks of groceries. That is a real hole in a carefully balanced budget, punched there for the crime of being late one time. Now widen the lens for a moment, because the $3,000 example is not the ceiling, it is closer to the floor. Picture a household that owed $8,000 after a year with an unexpected retirement account withdrawal or a capital gain from selling a property. File that late and let it sit, and the failure to file penalty alone, marching toward its 25% cap, can climb toward $2,000 on its own. Stack the failure to pay penalty and the compounding interest on top, and the punishment for a single late return can approach the size of a serious monthly obligation, all of it added to a tax bill the household already fully intended to pay. The penalty did not appear because anyone cheated or hid anything. It appeared because a stressful season pushed a deadline off the radar, and the meter did the rest quietly in the background. That is the exact scenario the automatic exemption is designed to diffuse, and it is why the difference between qualifying and not qualifying is worth this much of your attention. This is exactly why the shift to automatic relief carries so much weight for regular people. Understand clearly what it does and does not do. It is not forgiving your underlying tax. You still owe the tax you owe down to the dollar, and you still owe interest on it. What it removes is the punishment layered on top for being late once, when your record shows you are normally reliable. And it removes that punishment without making you find the right door, knock on it, and pray someone answers before the balance grows. For the person who qualifies, that can genuinely be the difference between a manageable bill and one that spirals into something frightening. Which makes what comes next all the more important, because tucked inside this very good news is a catch that the taxpayer's own advocate went out of her way to warn about, and most people will never once hear about it. Here is the part Washington is not advertising, and if you remember only one thing from this entire video, make it this, because it can protect you years from now when you least expect to need it. The same official who called this change a major taxpayer win also raised a serious warning about it in the same breath. The concern comes from the National Taxpayer Advocate herself, and it centers on something called reasonable cause relief. Stay with me here, because this distinction is the whole ballgame. There has always been more than one way to get a penalty removed. First Time Abate, now becoming the automatic exemption from penalty, is the version based purely on a clean record. But there is a second, completely separate kind of relief called reasonable cause. Reasonable cause is what you use when something genuinely serious happened to you. A hospitalization, a death in the family, a house fire or a natural disaster. A documented, legitimate reason you could not file or pay on time through no fault of your own. It is not automatic. You have to show your circumstances and make your case. But it is powerful, and here is the crucial part. It does not use up your clean record. Now here is the trap, and it is subtle enough that almost everyone walks right into it. According to the Taxpayer Advocate, when a taxpayer qualifies for both types of relief at the same time, the IRS applies the automatic exemption first on its own before you ever get to choose. That sounds completely harmless. It is not, because the automatic relief, the clean record kind, can generally be used only once within that window. Reasonable cause carries no such limit. So if the system automatically spends your one clean record waiver on a minor, unremarkable slip this year, it may quietly leave you without that cushion later, in a year when something truly catastrophic happens and you need relief the very most. The advocate stated the danger directly and deliberately. She warned that applying the automatic exemption in place of reasonable cause can undermine the purpose of both forms of relief and can leave taxpayers unable to access administrative relief in future years. Put that into plain kitchen table English. The system might spend your one good will chip on a small stumble now, and then have nothing left to hand you when the real crisis arrives later. Think about what that actually means for you personally in your own life. Suppose you file a little late this year for no dramatic reason at all, just ordinary busyness, and the IRS automatically waives the penalty. Wonderful, you think, problem solved. But suppose next year you are hospitalized for 2 months and genuinely cannot deal with your taxes, cannot even think about them. That is a textbook reasonable cause situation, the exact kind of hardship the second path was designed for. Except the IRS may have already spent your automatic waiver on this year's minor slip, and now the cleaner, stronger path may be harder to reach. In hindsight, you would have been far better off simply paying the small penalty this year and saving your options for the emergency. This is not a reason to fear the change or to distrust it. It is a reason to pay close attention. The lesson is simple and it is worth writing down. If a penalty notice arrives and something serious was truly behind your lateness, Do not just shrug and let the automatic system quietly absorb it. That silent absorption can cost you dearly down the road. And that lesson leads us straight into the next practical question, one with a real edge to it. Who does this whole change simply not cover at all? Because there are people and situations it deliberately leaves standing outside in the cold. For all the genuine good in this reform, it is not for everyone, and it is worth being honest about exactly who is left standing outside the door, because you need to know which side of it you are on. Start with the most obvious group. The automatic exemption is built specifically for people with a clean 3-year record. So by design, it does not help the taxpayer who is chronically behind. If you have filed late repeatedly over the years, or you are carrying unpaid balances from prior years that were never fully resolved, you likely fall outside the window, and the automatic relief is simply not built to catch you. That is not cruelty on the part of the IRS. It is the entire premise of the program. It is a reward for consistency, and consistency is exactly the thing a repeatedly late record does not have. If that describes your situation honestly, do not lose hope, because there is still a path. But it is the reasonable cause path, or working directly with the IRS on the specific facts of your individual case, not this automatic waiver. Then there are specific types of returns that the IRS carved out of the program entirely, and these matter for a particular slice of this audience. According to the Taxpayer Advocate, certain returns are excluded from the automatic exemption, including the federal estate tax return, known as Form 706, and the federal gift tax return, known as Form 709. If you are handling the estate of a parent or spouse who has passed away, or reporting large lifetime gifts to your children or grandchildren, this is critical to know. These are exactly the situations that tend to involve much larger dollar amounts and far more complexity, and they are precisely the ones the automatic system will not touch. For those returns, the older, more manual routes to relief still apply, and professional guidance matters more than ever, not less. Why does this carve-out even exist? Think about it from the agency's side for a moment. These returns are far less routine, far less frequent, and often enormous in dollar terms compared to a typical individual return. So the IRS is keeping them under closer, deliberate, case-by-case human review rather than letting an automatic system wave large penalties through without a second look. Whatever the full reasoning, the practical takeaway for you is clear and worth repeating. If you are dealing with an estate or a significant gift, do not assume the shiny new automatic relief has your back. It almost certainly does not, and assuming it does could be an expensive mistake. And there is a subtler group left behind too, one that is easy to overlook. The people who do not open their mail. The automatic exemption is genuinely automatic on the IRS side of things, but you still receive a paper notice, and you still need to read it and understand what it is actually telling you. If a notice arrives and you toss it unopened into a drawer with the rest of the mail you are avoiding, you may miss the fact that relief was applied, or far worse, miss a penalty that was not waived because you did not actually qualify and now needs your attention. Automatic does not mean invisible. It means the burden of asking has been lifted, not the burden of paying attention. So the honest picture here is uneven, and you deserve the honest version. Millions more people will be helped, which is real and significant progress worth acknowledging. But the chronically behind, the estate and gift filers, and anyone who ignores their mail are all still fully exposed to these penalties. Knowing which of those groups you fall into is the whole game. And that realization raises the timing question, because none of this switches on all at once for everybody. There is a schedule, a specific rollout, and where you happen to sit on that calendar changes exactly what you can expect to see and when. Timing matters enormously here, because this change does not flip on all at once like a single light switch. It rolls out in deliberate phases, and knowing where you stand on the calendar tells you what to actually expect from the IRS over the coming months. According to the IRS announcement on July 8th, the agency is beginning to phase in the automatic exemption during the summer of 2026, right now, as you are watching this. In this first phase, the relief is being applied to penalties tied to the 2025 tax year returns and to 2026 quarterly returns. So if you are dealing with a penalty connected to your most recent annual filing, or to quarterly filings you made this year, you are potentially in the earliest wave of people this new system touches. This is not some distant future promise. For some of you, it is happening in this current tax cycle. The bigger, more permanent shift comes at a specific date worth circling on your calendar. The IRS has said that for original returns with due dates on or after January 1st, 2027, the automatic exemption from penalty will replace First Time Abate entirely. That is the real changeover, the moment the old world fully ends. Before that date, the old First Time Abate framework is transitioning out, winding down in stages. After it, the automatic system becomes the standard, default way this relief is delivered to every eligible taxpayer. So January 1st, 2027 is the date to remember. That is when the new normal fully and finally arrives. What does all of that mean for you in practical, concrete terms over the next several months? It means you may start seeing this even now, in the second half of 2026, if you happen to have a qualifying penalty on a recent return. It means that as you look ahead to filing season early next year, the automatic relief will increasingly be baked right into how the IRS processes returns behind the scenes. And it means that the old, frustrating ritual, the one where you notice a penalty and have to call and effectively beg for its removal, is finally on its way out, replaced by a system that is designed to just quietly handle it for you. But here is where controlled optimism is far wiser than blind trust, and I want to be straight with you. Phase-ins are messy things. A brand new automatic process, applied across a system as vast and old and overloaded as the IRS, will not be flawless on day one or even in month one. Some qualifying penalties may slip through the cracks and get charged anyway, at least early on, simply because the automation is new and still working out its errors. Notices may be confusing or arrive with unclear language. The system may not always get your particular case right the first time it looks at it. That does not mean the reform is hollow or fake. It means you cannot afford to switch off your own attention just because the reassuring word automatic is now attached to the process. So the smart posture for the rest of this year is straightforward, and it is worth adopting deliberately. Expect the relief if you genuinely qualify, but verify that you actually received it. Do not simply assume the machine caught your case and moved on. Watch your mail closely, check that any penalty you believe should have been waived actually was waived, and be ready to speak up promptly if it was not. Which brings us to exactly where we turn next, because there is a right way and a very wrong way to handle that notice when it finally lands in your mailbox, and the difference between them can be measured in dollars. At some point, an envelope from the IRS may land in your mailbox. Most people feel a small, familiar jolt of dread the instant they see that return address. So let us replace that dread with a plan, because how you handle that single notice can genuinely change what you end up paying. The first rule is the simplest one, and it is also the one people ignore most often. Do not throw it in a drawer. The National Taxpayer Advocate said it directly and without hedging. Do not ignore the notice. Whatever it says, it is telling you something specific and important about your own account, and the worst possible outcome is the one where you never find out what that was until it has grown. If relief was applied, the notice explains that the penalty was waived because of your timely compliance history. If a penalty was charged instead, the notice explains that too, along with what you owe and by when. Either way, you need to know which of those two letters you are actually holding in your hand. The second step is to read it carefully and identify what it actually is. Is it telling you that a penalty was removed? Good. Keep it safe for your records and take 1 minute to confirm the numbers match what you expected. Is it telling you that a penalty was charged? Then you have a real decision to make, especially if you believe you qualified for relief and somehow did not get it, or if something genuinely serious was behind your lateness in the first place. Do not just accept the number on the page as final and reach for your checkbook. The third step is the one the taxpayer advocate stressed most pointedly, so underline it. Do not assume the IRS has already considered every option available to you. The automatic system is powerful, but it is not all-knowing, and it does not know your personal story. If you believe a penalty is wrong, or you think you qualify for relief that you did not receive, the advocate's guidance is direct. Call the IRS at the toll-free number printed right on the notice. Before you call, gather what you need so the conversation goes somewhere. Have the notice itself in front of you. Know the type of penalty, the tax year involved, and any documentation that supports your case, especially if you have a genuine reasonable cause story like a medical emergency, a death in the family, or a disaster that hit your home. And here is where that earlier warning becomes concrete, practical advice you can act on. Remember that reasonable cause relief is a separate path from the automatic exemption, and that it does not use up your clean record. So if your lateness was truly driven by something serious, that is worth raising specifically and by name when you call, rather than simply letting the automatic waiver quietly absorb the penalty and spend your one precious clean record chip on it. In many cases, you may be far better served by making the case for reasonable cause and preserving the automatic relief for another, harder day. This is subtle, and it is exactly the kind of judgment call where a qualified tax professional can pay for themselves many times over. The through line across every bit of this is the same, and it is the theme of the whole story. Automatic is a gift, a real one, but it is not a substitute for your own attention. The government has removed the requirement that you ask for what you were always owed. It has not removed the value of your understanding what happened and speaking up clearly when the machine gets it wrong. The people who come out genuinely ahead under this new system will be the ones who still read the letter, still know the basic rules, and still know exactly when to pick up the phone and make the call. So where does all of this leave you, and what should you actually keep an eye on from here forward? Watch your mail through the rest of this year, deliberately and without dread. If you have a penalty tied to your 2025 return or to your 2026 quarterly filings, and you have a clean 3-year record behind you, watch specifically for a notice telling you the penalty was waived under the automatic exemption from penalty. And if a penalty gets charged that you honestly believe should have been waived, treat that as your signal to act, using the toll-free number printed on the notice rather than just paying it and moving on. Watch the calendar as it moves toward January 1st, 2027. That is the date the automatic exemption fully replaces First Time Abate for returns due on or after it, the moment the new system becomes the standard everywhere. As that date approaches, this becomes simply the way the IRS delivers this relief, so it is genuinely worth knowing it exists and how it works before you ever find yourself needing it in a stressful moment. Watch how the rollout actually performs in the real world, not just how it was announced in a press release. A brand new automatic process at an agency this enormous will have early stumbles, and you should expect a few. The reform itself is real, and the numbers behind it are real. 7 times as many people potentially helped is a genuine, meaningful shift in how ordinary taxpayers are treated. But automatic does not mean flawless, and it certainly does not mean you can stop paying attention to your own account and your own mail. And above all, remember the catch, because it is the single piece almost no one else is talking about, and it is the piece most likely to quietly cost you. The automatic exemption can spend your one clean record waiver on a minor slip without asking you, potentially leaving you without that cushion in a future year when something truly serious happens and you desperately need it. If real hardship was behind your lateness, reasonable cause relief is a separate path that does not burn that clean record, and it may well be the smarter route to take. Knowing the difference between those two and choosing deliberately is the kind of quiet knowledge that protects you and your money years down the line. The bigger lesson sits underneath all of it, and it is worth carrying with you. Washington just removed one of the quiet penalties that landed hardest on the people least able to fight back, and it did so by making basic fairness the default instead of a favor you had to somehow know to ask for. That is a genuine improvement, and it deserves to be recognized as one. But the system still quietly rewards the person who stays informed, reads the letter that arrives, and understands the real choices sitting in front of them. So be that person. It is the single best financial move available to you here, and it costs you nothing but attention. This video is for informational purposes only and does not constitute financial, legal, or tax advice. Laws and policies change. Always consult a qualified professional before making any financial decisions.